Saving for a property deposit is one of the biggest financial challenges Australians face. The amount you need varies dramatically depending on where you want to buy. A deposit that's enough for a house in Adelaide won't even cover a decent apartment in Sydney. Understanding exactly how much you need to save in your state is the first step to making home ownership a reality. But it's not just about the deposit itself. There are other upfront costs that vary by state, particularly stamp duty, which can add tens of thousands of dollars to what you need. And there are different government schemes and concessions available in each state that can significantly reduce how much you actually need to save. I've analyzed the property markets in every Australian state and territory. I've calculated the realistic deposit requirements for first home buyers and investors. I've broken down all the additional costs you need to pay up front, and I've identified every government scheme, grant, and concession available to reduce your costs. By the end of this video, you'll know exactly how much money you need to have saved to buy property in your state. You'll understand the difference between what first home buyers need versus investors. You'll know what government help is available, and you'll have realistic savings targets based on actual median property prices. Let's start by understanding the different deposit levels and what they mean. Understanding deposit percentages and what they mean. When people talk about deposits, they use percentages: a 20% deposit, a 10% deposit, a 5% deposit. Let me explain what these actually mean and why they matter. A 20% deposit is the traditional standard. If you're buying a $600,000 property, a 20% deposit is $120,000. Banks prefer 20% deposits because it means you own a meaningful share of the property from day one. If property values drop by 10% or 15%, the bank is still protected because you have equity cushioning the loss. With a 20% deposit, you don't pay lender's mortgage insurance. This insurance protects the bank if you can't make repayments and they have to sell your property at a loss. It can cost $15,000 to $40,000 depending on your loan size. Avoiding this cost is huge. A 10% deposit is half of the traditional amount. On a $600,000 property, that's $60,000. Many banks will accept 10% deposits, but you'll need to pay lender's mortgage insurance. This insurance adds significantly to your upfront costs, though it can usually be added to your loan rather than paid in cash. A 5% deposit is the minimum most banks will accept. On a $600,000 property, that's just $30,000. This is much more achievable for many buyers. However, lender's mortgage insurance is even more expensive with a 5% deposit. The game changer for first home buyers is the First Home Guarantee Scheme. This federal government program lets you buy with just a 5% deposit without paying lender's mortgage insurance. The government guarantees the other 15% to the bank. This scheme saves you tens of thousands of dollars and makes homeownership achievable years earlier than saving 20%. For investors, the deposit requirements are stricter. Most banks require at least 10 to 20% for investment properties, and there's no government guarantee scheme for investors. You're also more likely to need genuine savings rather than being able to use gifts from family. So throughout this video, I'll give you 3 deposit scenarios: the realistic first home buyer deposit using the first home guarantee at 5%, the standard 10% deposit, and the ideal 20% deposit. You can see where you fit and what you're aiming for. But remember, the deposit isn't all you need. You also need to pay stamp duty and other costs. Let's break it down state by state. New South Wales, Sydney, and regional NSW. New South Wales is Australia's most expensive state for property, driven by Sydney's sky-high prices. But NSW also offers some of the best first home buyer concessions, which dramatically reduce what you actually need to have. Sydney median prices. The median house price in Sydney is approximately $1.23 million. The median unit price is around $835,000. These are confronting numbers for first home buyers. First homebuyer deposit requirements in Sydney. Let's say you're buying an $800,000 unit as your first home. Here's what you need. 5% deposit, $40,000. Stamp duty, 0. First homebuyer exemption on properties up to $800,000. Inspections and legal fees, $3,000. Lender's mortgage insurance, 0. Covered by first home guarantee. Moving and immediate costs, $4,000. Emergency buffer, $8,000. Total, $55,000. If you're buying a $950,000 unit, the maximum for the first home guarantee in Sydney for existing properties, you need 5% deposit, $47,500, stamp duty, approximately $14,000, reduced concession between $800K and $1 million, other costs and buffer, $15,000. Total, $76,500. For houses, most first home buyers in Sydney are priced out of the market. A median price Sydney house at $1.23 million requires 5% deposit, $61,500, stamp duty, approximately $49,000, no concession above $1 million, other costs and buffer, $20,000. Total, $130,500. That's assuming you can even access the first home guarantee at $1.23 million, which you can't for existing homes. The cap for new homes is $1.2 million, but finding a new house in Sydney at that price is rare. Regional NSW. Regional New South Wales is far more affordable. Cities like Newcastle, Wollongong, and the Central Coast have median house prices between $850,000 and $950,000. Smaller regional towns are even cheaper. For a $750,000 house in regional NSW, 5% deposit, $37,500, stamp duty, $0, first home buyer exemption, other costs and buffer, $12,000. Total, $49,500. For a $600,000 house in a smaller regional town, 5% deposit, $30,000, stamp duty, $0, other costs and buffer, $10,000. Total, $40,000. NSW investor requirements. Investors don't get stamp duty concessions or the first home guarantee. For a $900,000 Sydney unit with 20% deposit, $180,000, stamp duty approximately $37,000, other costs $5,000, total $222,000. With a 10% deposit, you'd need about $125,000, but would pay around $30,000 in lender's mortgage insurance, which could be added to your loan. NSW government schemes. The big one is stamp duty exemption for first home buyers on properties up to $800,000. Between $800,000 and $1 million, you pay concessional stamp duty. This saves up to $31,000. The first homeowner grant in NSW is $10,000, but only for new homes priced under $600,000 in Sydney or $750,000 in regional areas. Because of these limits, most Sydney buyers can't access this grant. The First Home Guarantee Scheme has price caps of $950,000 for existing homes or $1.2 million for new homes in Sydney. In regional NSW, it's $600,000 existing or $750,000 new. NSW summary. Realistically, first home buyers in Sydney need $50,000 to $80,000 to buy a unit, or $130,000 plus to buy a house. Regional NSW first home buyers need $40,000 to $60,000 for houses. Investors need $150,000 to $250,000, depending on what they're buying. Victoria, Melbourne and regional Victoria. Victoria has been the weakest property market recently, which actually creates opportunity. Melbourne is now cheaper than Brisbane, Adelaide, and Perth, despite being Australia's second largest city. Melbourne median prices. The median house price in Melbourne is approximately $1.05 million. The median unit price is around $555,000. Melbourne units offer significantly better value than Sydney units. First home buyer deposit requirements in Melbourne. For a $650,000 unit in Melbourne, 5% deposit, $32,500, stamp duty, approximately $8,000, concessional rate, other costs and buffer, $12,000, total, $52,500. For an $800,000 house in Melbourne's outer suburbs, 5% deposit, $40,000, stamp duty, approximately $20,000, concessional rate, other costs and buffer, $15,000, total, $75,000. For a median-priced Melbourne house at $1.05 million, 5% deposit, $52,500, stamp duty, approximately $55,000, no concession above $750,000. Other costs and buffer, $20,000. Total, $127,500. Regional Victoria. Geelong has a median house price around $730,000. Ballarat and Bendigo are around $630,000 to $650,000. These are much more affordable than Melbourne. For a $750,000 house in Geelong, 5% deposit, $35,000, stamp duty, approximately $13,000, concessional, other costs and buffer, $12,000, total, $60,000. For a $600,000 house in Ballarat, 5% deposit, $30,000, stamp duty, $8,000, concessional, other costs and buffer, $10,000, total, $49,500. Victoria investor requirements. For an $800,000 Melbourne property with 20% deposit, 20% deposit, $160,000. Stamp duty, approximately $44,000. Other costs, $5,000. Total, $209,000. Victoria government schemes. First home buyers pay no stamp duty on properties up to $600,000. Between $600,000 and $750,000, you pay concessional stamp duty. This saves up to $25,000. The first home owner grant in Victoria is $10,000 for new or substantially renovated homes valued up to $750,000. The first home guarantee caps are $850,000 for existing homes or $1 million for new homes in Melbourne. Regional Victoria is $550,000 existing or $650,000 new. Victoria summary. Melbourne first home buyers need $50,000 to $80,000 to buy units or $75,000 to $130,000 for houses. Regional Victoria first home buyers need $45,000 to $65,000. Investors need $150,000 to $250,000. Melbourne's relative affordability compared to other capitals makes it appealing right now. Queensland, Brisbane and regional Queensland. Queensland has been the star performer for property growth recently. Brisbane prices have surged, making it more expensive than Melbourne. Regional Queensland has also boomed. Brisbane median prices. The median house price in Brisbane is approximately $1.04 million. The median unit price is around $671,000. Brisbane is no longer the affordable alternative it once was. First home buyer deposit requirements in Brisbane. For a $700,000 unit in Brisbane, 5% deposit is $35,000, stamp duty approximately $1,000, significant concessions for first home buyers, other costs and buffer $12,000, total $48,000. For a $900,000 house in Brisbane, 5% deposit is $45,000, stamp duty approximately $8,000, concessional, other costs and buffer $15,000, total $68,000. For a median-priced Brisbane house at $1.04 million, 5% deposit is $52,000, stamp duty approximately $40,000, reduced concession above $800K. Other costs and buffer, $20,000. Total, $112,000. Regional Queensland. The Gold Coast has median prices around $980,000. The Sunshine Coast is about $1 million. These tourist regions are expensive, but inland cities like Toowoomba, $620,000, and Townsville, $500,000, are more affordable. For a $650,000 house on the Gold Coast, 5% deposit is $32,500. Stamp duty is minimal, concessions apply. Other costs and buffer, $12,000. Total, $44,500. For a $620,000 house in Toowoomba, 5% deposit is $31,000. Stamp duty is minimal. Other costs and buffer, $10,000. Total, $41,000. Queensland investor requirements. For a $900,000 Brisbane property with 20% deposit, 20% deposit, $180,000. Stamp duty, approximately $37,000. Other costs, $5,000. Total, $222,000. Queensland government schemes. Queensland offers generous stamp duty concessions for first home buyers. On properties up to $500,000 for existing homes, you pay no stamp duty. For new homes, the threshold is $750,000. Between these amounts and $800,000, you pay concessional rates. The first homeowner grant in Queensland is $15,000 for new homes, which is more generous than most states. The first home guarantee caps are $700,000 for existing homes or $850,000 for new homes in Brisbane. Regional Queensland is generally $550,000 existing or $650,000 new, though some areas have higher caps. Queensland summary. Brisbane first home buyers need $45,000 to $70,000 for units, or $75,000 to $130,000 for houses. Regional Queensland varies dramatically by location, from $40,000 in affordable inland cities to $70,000 plus in expensive coastal areas. Investors need $150,000 to $250,000. Queensland's higher first homeowner grant of $15,000 helps offset the higher prices. South Adelaide, Adelaide and Regional SA. South Adelaide has been one of the best performing markets over the past 5 years. Adelaide has transformed from Australia's most affordable capital to being more expensive than Melbourne. Adelaide median prices. The median house price in Adelaide is approximately $1.01 million. The median unit price is around $568,000. Adelaide is no longer the budget option it once was. First homebuyer deposit requirements in Adelaide. For a $600,000 unit in Adelaide, 5% deposit, $30,000, stamp duty, approximately $2,000, significant concessions. Other costs and buffer, $10,000. Total, $42,000. For a $900,000 house in Adelaide, 5% deposit, $45,000, stamp duty, approximately $12,000, concessional, other costs and buffer, $15,000, total, $72,000. For a median-priced Adelaide house at $1.01 million, 5% deposit, $50,500, stamp duty, approximately $40,000, other costs and buffer, $18,000, total, $108,500. Regional South Australia. Regional SA remains quite affordable. Towns like Mount Gambier, Whyalla, and Port Lincoln have median house prices between $400,000 and $550,000. For a $500,000 house in Regional SA, 5% deposit, $25,000, stamp duty, minimal, concessions, other costs and buffer, $8,000, total, $33,000. SA investor requirements. For an $850,000 Adelaide property with 20% deposit, $170,000, stamp duty, approximately $45,000, Other costs, $5,000. Total, $220,000. South Australia government schemes. SA offers stamp duty concessions for first home buyers on properties up to certain thresholds. The concessions are generous, potentially saving $20,000 plus. The first homeowner grant in SA is $15,000 for new homes, matching Queensland's generosity. The first home guarantee caps are $650,000 for existing homes or $800,000 for new homes in Adelaide. Regional SA is $450,000 existing or $550,000 new. South Australia summary. Adelaide first home buyers need $40,000 to $75,000 for units or houses in outer suburbs, or $100,000 plus for median-priced houses. Regional SA first home buyers need just $30,000 to $45,000. Investors need $120,000 to $220,000. Adelaide offers good value compared to Sydney and Brisbane, though not the bargain it was 5 years ago. Western Australia, Perth and regional WA. Western Australia has been booming recently, with strong mining sector driving economic growth and property demand. Perth prices have surged dramatically. Perth median prices. The median house price in Perth is approximately $935,000. The median unit price is around $520,000. Perth has gone from affordable to expensive in just a few years. First homebuyer deposit requirements in Perth. For a $550,000 unit in Perth, 5% deposit, $27,500, stamp duty, minimal, transfer duty concessions, other costs and buffer, $10,000. Total, $37,500. For an $800,000 house in Perth, 5% deposit, $40,000, stamp duty, approximately $15,000, concessional, other costs and buffer, $15,000. Total, $72,000. For median-priced Perth house at $935,000, 5% deposit, $46,750, stamp duty, approximately $32,000, concessional, other costs and buffer, $18,000. Total, $108,500. Regional Western Australia. Regional WA varies dramatically. Mining towns like Karratha have high prices but are risky. Cities like Bunbury and Geraldton are more affordable at $500,000 to $600,000 median prices. For a $500,000 house in Bunbury, 5% deposit, $27,500, stamp duty, minimal, other costs and buffer, $8,000. Total, $37,500. WA investor requirements. For an $850,000 Perth property with 20% deposit, $170,000. Stamp duty, approximately $40,000. Other costs, $5,000. Total, $215,000. Western Australia government schemes. WA offers transfer duty concessions. Stamp duty is called transfer duty in WA for first home buyers. The concessions can save up to $20,000 plus. The first home owner grant in WA is $10,000 for new homes. The first home guarantee caps are $600,000 for existing homes or $750,000 for new homes in Perth. Regional WA varies by location. Western Australia summary. Perth first home buyers need $35,000 to $70,000 for units or $70,000 to $100,000 for houses. Regional WA, excluding mining towns, needs $35,000 to $50,000. Investors need $150,000 to $220,000. Perth's rapid price growth means what was affordable 2 years ago isn't anymore. Acting quickly matters in Perth. Tasmania, Hobart and regional Tasmania. Tasmania had a big boom during COVID but has cooled significantly. Hobart is now one of the more affordable capitals again. Hobart median prices. The median house price in Hobart is approximately $730,000. The median unit price is around $487,000. Hobart offers reasonable value compared to mainland capitals. First homebuyer deposit requirements in Hobart. For a $500,000 unit in Hobart, 5% deposit equals $25,000. Stamp duty, approximately $4,000. Concessions apply. Other costs and buffer, $8,000. Total, $37,000. For a $730,000 house in Hobart, 5% deposit equals $36,500. Stamp duty, approximately $14,000. Concessional. Other costs and buffer, $12,000. Total, $62,500. Regional Tasmania. Launceston has median prices around $640,000. Smaller regional towns are between $400,000 and $550,000. For a $600,000 house in Launceston, 5% deposit equals $30,000. Stamp duty, approximately $8,000. Concessional. Other costs and buffer, $10,000. Total, $48,000. Tasmania investor requirements. For a $700,000 Hobart property with 20% deposit, 20% deposit equals $140,000. Stamp duty, approximately $27,000. Other costs, $5,000. Total, $172,000. Tasmania offers duty concessions for first home buyers that can save $10,000 to $20,000. The first home owner grant in Tasmania is $30,000 for new homes, which is the most generous in Australia. However, it only applies to new builds. The first home guarantee caps are $600,000 for existing homes or $750,000 for new homes in Perth. Regional WA varies by location. Tasmania summary. Hobart first home buyers need $35,000 to $65,000. Regional Tasmania needs $30,000 to $50,000. Investors need $120,000 to $180,000. Tasmania's generous $30,000 first home owner grant for new builds makes building a home particularly attractive here. Australian Capital Territory, Canberra. Canberra is a unique market driven almost entirely by public sector employment. It's stable but expensive. Canberra median prices. The median house price in Canberra is approximately $934,000. The median unit price is around $532,000. First home buyer deposit requirements in Canberra. For a $550,000 unit, 5% deposit equals $27,500. Stamp duty varies. ACT has complex duty system. Other costs and buffer, $10,000. Total, $37,500, plus. For a $900,000 house, 5% deposit equals $45,000. Stamp duty, significant. ACT duties are higher. Other costs and buffer, $15,000. Total, $60,000 plus. Stamp duty varies based on specific circumstances. ACT investor requirements. For an $850,000 property with 20% deposit, 20% deposit is $170,000. Stamp duty, approximately $35,000 plus. Other costs, $5,000. Total, $210,000 plus. ACT government schemes. ACT has duty concessions for first home buyers, but also has a unique land tax system. The duty system is complex, with different rates for different situations. The first homeowner grant is available for new homes. The first home guarantee caps are $800,000 for existing homes or $1 million for new homes. ACT summary. Canberra first home buyers need $35,000 to $90,000 depending on what they buy. Investors need $150,000 to $250,000. Northern Territory, Darwin. Darwin is unique with boom-bust cycles tied to major projects and defense spending. Darwin median prices. The median house price in Darwin is approximately $660,000. The median unit price is around $437,000. Darwin is currently in a boom phase. First homebuyer deposit requirements in Darwin. For a $450,000 unit, 5% deposit is $22,500. Stamp duty is minimal, concessions. Other costs and buffer is $8,000, total $30,500. For a $660,000 house, 5% deposit is $33,000, stamp duty is minimal, generous concessions, other costs and buffer is $12,000, total $45,000. NT investor requirements. For a $600,000 property with 20% deposit, 20% deposit is $120,000, stamp duty is approximately $25,000, other costs is $5,000, total is $150,000. NT government schemes. NT offers generous stamp duty concessions for first home buyers, potentially saving $20,000. The first homeowner grant is $10,000 for new homes, plus additional grants sometimes available. The first home guarantee caps are $650,000 for existing homes or $800,000 for new homes. NT summary: Darwin first home buyers need $30,000 to $50,000. Investors need $100,000 to $160,000. Darwin offers affordability but comes with higher risk due to cyclical economy. The complete picture, what you actually need. Let me summarize what you realistically need in each state as a first home buyer using the First Home Guarantee Scheme. For units, Sydney, $50,000 to $80,000, Melbourne, $50,000 to $70,000, Brisbane, $45,000 to $65,000, Adelaide, $40,000 to $60,000, Perth, $35,000 to $70,000, Hobart, $35,000 to $50,000, Canberra, $35,000 to $60,000, Darwin, $30,000 to $45,000. For houses, Sydney, $130,000 plus, most first home buyers buy units. Melbourne, $75,000 to $130,000, Brisbane, $70,000 to $115,000, Adelaide, $70,000 to $110,000, Perth, $70,000 to $100,000, Hobart, $60,000 to $80,000, Canberra, $90,000 plus, Darwin, $45,000 to $60,000. For investors, 20% deposit, add 30 to 40% to these amounts for stamp duty and higher deposits without government assistance. Final thoughts. The amount you need varies dramatically by state and by what you're buying. Sydney requires the most, with first home buyers typically needing $50,000 to $130,000 depending on whether they buy a unit or house. Darwin and Tasmania require the least, with $30,000 to $60,000 often sufficient. The First Home Guarantee Scheme is genuinely transformative, reducing deposit requirements from 20% to 5% and eliminating lenders' mortgage insurance. This saves tens of thousands and makes home ownership achievable years earlier. Stamp duty concessions for first home buyers save another $10,000 to $30,000 in most states. Taking full advantage of these schemes is crucial. The reality is that buying your first home requires significant savings, typically $40,000 to $100,000, depending on your state and what you're buying. This takes time to save, usually 2 to 5 years for most people. But it's achievable. Set a specific target based on your state, create a budget, automate your savings, and stay focused on the goal. Thousands of first home buyers achieve this every year, and you can too. Now you know exactly what you're aiming for. Start saving.